Hey, Adrian, thank you so much for joining us today.
It's a pleasure, David. Thanks for having me.
Yeah. I look at your profile and life journey. Looks very, very interesting. You have gone through the so diverse professional journey. So why don't you tell us a little bit about yourself and your journey to founding the Convergence Venture and AC Ventures?
Sure, be happy to. So I actually start from a finance background. I studied economics at Cambridge and then was a banker at JP Morgan for a couple of years. But my passion has always been in entrepreneurship and in particular technology entrepreneurship. So I applied to Stanford in 2003, ultimately with the goal of starting a venture firm in an emerging market. So after Stanford, at Stanford actually, the entrepreneurship bug really got me, and I started working on an idea to use a virtual call center technology to provide scalable, high quality, on-demand English training to people in China. And I spent the whole of my second year at Stanford really focused on this business. So when I graduated in 2006, I left with my co-founder, who I met at Stanford. And we went to China to build what was then one of the first companies using this model to provide one-on-one English training. We raised some venture money, some angels in Silicon Valley, and then later a venture fund in China. And then after 5 years of building the business into what then was one of the largest live on-demand English training companies in China, we were acquired by a US-based business called Eleutian that was backed by a private equity company. And so that was a tremendous experience of my first foray into being an entrepreneur. Certainly, I learned a huge amount from that experience. And many of those lessons I still use today when I'm speaking with entrepreneurs and founders in our portfolio. But after having the company acquired, I still really had the itch to go out and start more companies. And one of the areas that I was most interested in was in the whole Airbnb model. I could see there was so much empty inventory of apartments in China, and of course, a huge demand for travel, both business and leisure. And as I was looking at this potential opportunity in this area, I was actually contacted by some people who worked for Oliver Samwer. This was even pre-Rocket days when City Deals was acquired by Groupon, and really that Oliver Samwer was more involved with the Groupon business. But they'd already started investing and looking at starting new businesses around the world. So when I told them this, they said, they built something in Germany called Wimdu, which was a short-term accommodation marketplace, and wanted to do the same thing in China. And so I signed on and became the co-founder and CEO of that business in China. It was an intense experience. I think we had scaled to over 200 employees in 70 cities, booking over 500,000 nights in less than 6 months. And compared to my first experience of building a company in edutech, arguably a bit early for its time, this was right at the right time. And so witnessing and being, not just witnessing, but being the operator, the entrepreneur, the CEO, building a business at such speed and scale, again, taught me hugely valuable lessons in entrepreneurship and in particular tech entrepreneurship. So that company, I built I spent the next year there, and then I started looking at opportunities abroad. And I have to confess, it was my girlfriend, then now wife, who led me to really discover the opportunities in Indonesia. We'd started dating in 2010. She's from Indonesia. And as I made trips down to Southeast Asia and Indonesia, I discovered just what a huge opportunity there was there. I hadn't truly digested the fact that Indonesia was the world's 4th largest population, and that the many proven technology business models that you see in China, in India, and elsewhere in the world had yet to be really been done at scale there. And so I made up my mind to move to Indonesia. I actually moved with Rocket Internet and felt that I needed to create a new network, meet more people, especially as I was going to a new market. And so I moved to Indonesia in 2012 and was involved with building an e-commerce startup with Rocket over there. But it was a fantastic place to be. It really, Rocket pulled in a lot of high caliber talent from consulting, banking, and other tech companies, of people, both locals and foreigners, who are seeking to build interesting businesses in Indonesia. So I started Convergence Ventures, started working on it around 2013. We managed to get our the fund started to invest in 2000 and late 2014. I'd say it's 2015, and the way I got started with Convergence Ventures is I was speaking to a number of the large conglomerates in Indonesia, and increasingly they were thinking of ways they could get they could get in on the game of what was happening in technology. And what first became more consulting for them became a fund where several of these conglomerates anchored the fund, and Convergence Ventures was born. And together, myself and my partner then Donald, we set about investing in early stage technology enabled businesses, largely focused on the Indonesia market. That was a $30 million fund. It's performed very solidly, especially in the last few years. And we completed active investment of that fund in 2019. And while we had completed the active investment in that fund, I was thinking about how to build the next fund and how we could take Convergence to the next stage. And I happened to be talking to my classmate, Pandu. Pandu has been a fantastic investor and entrepreneur in Indonesia. He's an early investor in several decacorns. And him and his business partner, Michael, had started a seed fund called Agaeti, which I was familiar with because we'd done a couple of deals together. So in early 2019, they were also looking to raise their next fund. We'd had a strong, long history of a relationship and knowing each other. And we had the similar approach and philosophy for investing in early stage technology startups and then working very closely with the companies to take them to scale. And so with all of that, we decided we would combine our companies. So that's essentially meaning the teams were combined, and AC Ventures was then born. Since then, AC Ventures has grown. We're now 20 people in our team, headquartered and based in Indonesia. Our fund philosophy continues to be the same as it was before, empowering entrepreneurs with experience, network, and capital. And we have a much larger fund now that we are investing out of.
Yeah, interesting. Very interesting. I thought it's a Convergence Venture and then AC Venture are different company. You are running a two venture, but in fact, it is a merge. I mean, AC Venture is a merged company from the Convergence Venture.
Correct. The team had merged together, and now AC Ventures continues to manage the earlier funds, but they are fully deployed and no longer actively investing in new opportunities.
Yeah, I quickly did a little bit of research about company you set up, including Convergence Venture and AC Venture. I found out the description of the business about Convergence Venture a little bit interesting, different from the other venture capital. You described that you want to connect and converge and the talent and the skill and business model and the capital, etc., etc. I thought that it is something other than venture capital. So is it pure, full-time venture capital, or does that have a unique feature, characteristic of business model compared to others?
I think when you look at venture, and perhaps if you look at the most established market for venture around the world, the US, you actually see different flavors of venture capital. I think on the one end, you might see firms which really are just a check. They invest capital and really let the entrepreneurs go and do all the work, and they're very hands-off. On the other hand, you've got venture firms that not only invest, but are very hands-on in helping the entrepreneurs build their businesses. So, for us, we're closer to the latter end of really being more hands-on. And that's, I think, stems from our DNA. All three of the GPs, we've been entrepreneurs ourselves. We've been in the shoes of the founders that we back. We've been there in terms of building a team, building a product, raising money, also been there in crisis time. So we understand that this is a very risky thing to do, to go and start your own business. And so we want entrepreneurs to be able to see us as partners to them, not just from a capital standpoint, but being there for them in helping them build their businesses.
I totally agree with you. I think my background is work with a large company, sizable, medium-sized company in terms of financing investment for the past few decades. But after I interviewed, hundreds of entrepreneurs of a startup, I found out even though the startup has a great business model, great team, and then great venture capital partner, they have more than that to solve a lot of problems on the ground every day, right? So,
Absolutely.
and then in fact, when I interviewed a founder of venture capital, everybody said beside making investment into their portfolio company, they want to support and then help them to grow the business together. But in theory, strategy, that make a lot of sense. But in reality, in practice, which is very difficult, right?
It's not straightforward,
Right.
certainly, right? Because you invest in a number of companies, right? You can't suddenly spread your resources so thinly. And there's only so many hours in the day for our GPs and also our team to be spending with each company. So we are tactical and strategic about how we work with the companies. Not all companies, I think that you can look at that through a number of filters. I think, first of all, not all companies need all the same types of help, right? And then we're not helping on every level of the business too. We're not wanting to get in the way of the entrepreneur, but there are certain strategic leveraged ways of support that we can provide to entrepreneurs that help really make a difference to their traction, to the building of value in those businesses. And we know that because we've built businesses ourselves. So as an example, one of the areas we constantly hear our entrepreneurs are struggling with is finding really good talent. Now, even with talent, it's not like we are hiring at every level. We're looking for really good talent that can make a difference to that entrepreneur's team. So it might be a C-level, it might be a head of a certain part of their business. It might even be a co-founder sometimes. And so these are areas that we select, that we get involved in, and we hope that we can be involved in areas that can really have a big impact, a 10x impact to the firm, versus just any area.
Yes.
And that's how we scale.
Got you. In fact, personally, I helped to set up, working for the bank and finance company in the past, I helped to set up so many joint venture in the emerging market in the Asia. But I feel that it feels like a lot of people have huge doubt about the, synergy of a joint venture. Yeah, theoretically, it makes a lot of sense. But as compared to a straightforward, business is a M&A and then outright acquisition, people think that they're very difficult to manage the joint venture relationship, very difficult to execute that synergy going forward in the future, right? So then people think that also many of them has a negative experience setting up running a joint venture together with the emerging market. But given that you set up the joint venture, AC Venture with the partner, look, it seems like you're a big believer in the joint venture and then collaboration for synergy.
That's interesting. You kind of look at it that way. To be clear, we don't see AC Ventures as a joint venture. AC Ventures is one firm with one culture, one strategy, and because even if its history comes from two firms coming together, it really is just one firm now. And I think that's been really important to making sure that our strategy is all executed in the way that we believe it. It's also really important that the partners have had all that history together, and they have a shared experience and complementary networks and experience that can benefit not just the running of this firm, but also the founders with whom we back. So I'd say that I know that M&A is not an easy thing. Fortunately, at the time, we were both fairly small in terms of size. We weren't integrating hundreds of employees, for example. And I think, again, most importantly, the ultimate vision and mission of our firms is very, very 100% aligned. And there is a very strong culture and values alignment from the partners down to all the team members. So that's been instrumental in making sure that the AC is able to build on the vision that it's striving for.
Wonderful. So my next question is, can you tell us a little bit about the AC Ventures investment strategy and theme? For example, sector, geographic market, ticket size, and stage of investment. Anything you want to share?
Yeah, so as mentioned, AC Ventures is focused on the Indonesian market. We believe Indonesia as a market within Southeast Asia is, practically speaking, the only market where you can build to the billion-dollar scale for technology businesses. True. And especially for early stage businesses, it really makes sense to start in the largest market. So we're early stage Indonesia focused technology investors. Second, we're very thematic investors. We have the benefit investing in Indonesia to be able to look at proven models of disruption from other markets. So we do a lot of upfront work, the research, speaking to other companies in other markets, other GPs in other markets, to build that substantial conviction in a sector, in a market, and to understand it's the right timing for disruption to occur in Indonesia. We believe that this reduces the innovation risk of new businesses in a market like Indonesia, and ensure that we can make the right bets at the right time. Having said that, we continue to be very founder-focused investors. From early stage even to late stage, the founders and the CEO driving the business is probably the most important thing. So we spend a lot of time where possible to really understand the founders, ensure that there is founder market fit in the business that they are building. We can invest right from a seed stage. And so our sweet spot is anywhere from seed stage to a Series A with a capability to follow on to for downstream follow-on rounds. And that means our investment checks can be from the hundreds of thousands up to 5 to 6 million in a single first check. It really then does depend on the size of the sector, the quality of the team, the traction that they've had. Seed these days and even Series A can mean many different things, because some seed, they already have a product up and running, they've got clients, they've even got revenue. Other seeds are just a business idea. The most important thing is, as I said, we've got conviction and thematic research to back up that conviction in the market, and that we're confident that this is the best team in the market to go and execute.
Got you. Can you please tell us about a couple of your current portfolio company and you're bullish about?
Sorry, and the second part?
Can you please tell us about the couple of your current portfolio company you are bullish about?
Oh, bullish about, right, yes. So some of the sectors that we are seeing some huge momentum and traction, and especially on the tailwinds of COVID, are massive sectors: social commerce, commerce in general, but in particular social commerce, and also the micro, small, medium enterprise sector. Now, why is social commerce so interesting? Because we believe there are two types of commerce opportunities available, right? Commerce opportunities that are serving frontier customers, and generally frontier customers are those in second and third tier cities, and also frontier products. So in particular, one that we've seen in post-COVID is groceries, for example. So in these two sectors, social commerce as a business model is super interesting because it helps bridge some of the challenges and friction that these frontier products and customers used to have, and therefore are not as well penetrated and not as well used through the horizontal e-commerce platforms, right? Those frictions can be things like low trust in second, third tier cities. It can be hard accessibility because of lack of logistics infrastructure. It could be affordability because consumers in second and third tier cities just don't have as much buying power as first tier cities. Now, social commerce, for example, we're in a company called Kita Beli, can bridge that because they use mechanisms to be able to overcome these frictions. Kita Beli is like Pinduoduo. It's basically a consumer-focused group buying company focused on the second and third tier cities. And how do they overcome it? Well, what they do is they aggregate purchases, right? So you're buying with your friends, a team buying model. When you have people buying as well, it improves the trust, it increases the affordability, and they've integrated that with a community leader who can help solve for the last mile delivery problem. So fascinating model, proven in China and then localized to work in Indonesia. But that's one example in the social commerce space. The other sector is in MSMEs. Now, MSMEs is again, a thematic sector that we have done a lot of research about. And you'll see in many other countries, MSME or SME B2B hasn't actually risen as fast as I think in Indonesia. And investors maybe haven't paid it as much attention. Now, if you look at the raw numbers for MSMEs in Indonesia, they're incredible. There are maybe 63 million MSMEs in Indonesia, contributing over 67% of the nation's GDP. It's no understatement to say this is the engine of Indonesia's economy. And then on top of that, they also employ close to 97% of the adult workforce. So a huge, huge sector of the economy. Having said all that, this sector, the MSME sector, has historically not used a lot of technology. And because of their subscale size, there are a lot of big problems that they face. Things like supply chain inefficiencies, inefficient operations, lack of ability to sell online, or issues with distributing online. And then one of the largest also is access to credit, because these businesses are so small in many cases, and there's no real information about their financial health. Banks won't lend to them, and there's nothing to collateralize against. So we've invested in a number of companies that in this sector that address each of these issues individually, but also at different scales of these types of companies. You can have tiny companies, which are one-man shows, let's say, a one-man, one-woman show. You can also have the medium-sized businesses, which could be like Ismaya Group, where it's a kind of a multi-chain F&B establishment in Indonesia. So we've invested in technology businesses going after each of these types of problems. If I were to pick one that I think has grown incredibly fast, and we've worked very closely with, is a company called Ula. It recently hit the news because it was the first company in Southeast Asia that Jeff Bezos had invested in, and but certainly they've raised venture capital from very respected names globally as well. But what does Ula do? They're similar to a company called Udaan in India, and they primarily focus on solving for the supply chain of micro, small, medium enterprises, in particular warungs, the endpoint retailers for many FMCG goods. So because the supply chain is so fragmented, there's low visibility on price. There's something, stock outs that they're unaware of, and also a lot of friction in trying to get the goods from the principal or the wholesaler at the top end right into the retailer at the end. So they provide a platform in which to help those warungs procure all the way from the upstream. And increasingly, they're employing more and more technologies to increase efficiency and help those warungs to be able to sell better, and then also to grow their businesses as well.
Very interesting. Very interesting. In the past, because Indonesia is a very sizable market in Asia, right? So in the past few decades, media, investor talk about the potential of Indonesian market, right? They have a, popular story narrative is more than 200 million people, growing consumer group, young population, etc., etc. But frankly speaking, we haven't seen that the explosive growth of Indonesian economy in terms of traditional industry, right? That's true. So people became a little bit skeptical about that potential, because that's a long told story. But now I can see the startup ecosystem in Indonesia is very, very hot, right? In terms of valuation, getting huge attention. So what is your thought? What is your thought about the future of Indonesian startup ecosystem as an innovation hub?
I'm very bullish about the prospects of Indonesia, which is why I decided to relocate and move there. I think that first of all, when you comment on the traditional businesses, actually Indonesia itself is home to some of the largest businesses in the region. And you just think about businesses like BCA, it's one of the largest banks in the region. And you look at Indo Food, which is also one of the largest FMCG companies in the region, and probably quite highly ranked globally too, right? So the benefit, the advantages of this massive demographic tailwind base, that, if you will, that you have in Indonesia can't be underestimated, and certainly you can build incredible businesses off of that. Now, when we started investing 8 years ago in Indonesia, there were a lot of challenges in being able to build such businesses. There was challenges in capital. There wasn't a lot of capital to invest in technology businesses. There weren't any precedents. No one had shown that you could build a massive technology business in Indonesia too. So people were taking that risk. Talent was another issue because, again, it was so early in the ecosystem. There weren't many people who had been in technology. The few who had been, maybe they were Indonesian graduates who came back from the US and started building companies, people like Nadim, for example. But certainly not to the extent that you have today. And of course, within the entire ecosystem, doesn't matter if you're consumers or enterprises, there was a lot less trust. People weren't willing necessarily to buy things online so readily, right? And people were willing to adopt technologies so readily. So what we've witnessed from then until now is a complete turnaround. I think, even thinking about our initial fund thesis when we were building the first fund, we were forecasting, yes, probably we would have, unicorn companies, within the 5, 6, 7 year timeframe that we were investing in the fund. We actually did not model that decacorn, multi-billion-dollar companies would necessarily come out, and we've got several of them now, right? So, the technology landscape has changed massively, and I think that's for the better, right? And that's why I'm so bullish about the future. When you look at the big picture, you're talking about technology being digitizing everything in the economy. I think if you look at the total digital economy in Indonesia, it's still less than 10% of the total GDP. So there's a massive runway for technology to continue to digitize the economy. And when you think about all the other friction that we had before, you've got much more capital to invest in the technology companies than you had ever before. You've got much better talent. You've got the Gojek, Traveloka, Tokopedia, all these big unicorn companies, which now have trained up entire cohorts of engineers, of digital marketers, of entrepreneurs who are now coming out to go and build businesses. And young people are now empowered by technology to go out and start a business. You've got the right background, the right experience, the right passion for the problem that you want to solve. Technology gives you a really good edge to go and have a go at solving them. You don't have to necessarily go and take a more traditional route for a career.
Yes.
So overall, I think it's a better time than ever to be investing in Indonesia.
Yeah, I agree. As that's like sometimes weakness can be strength, right? Many cases.
That's right.
So as compared to the Asian economy like Japan, Korea, highly structured and complicated way. They are well organized and a lot of existing large player. Very difficult to execute the new innovation idea, disruptive idea, right? As compared to the Indonesia. So that might be a great opportunity and potential for Indonesian market. I agree. Yes. Okay. My last questions. I learned that you loved triathlon, right?
Yes.
So how often do you run?
Earlier in the conversation, we talked about how to achieve some balance, and things are incredibly busy right now. Beyond my family, personally, for me, exercise is a great way for me to get some mental balance in all the workload and everything that's going on. Triathlon, I picked up while I was at Stanford. I trained for a Ironman triathlon, which is it involves about 4 kilometers swim, 180 kilometer bike ride, and a 42 kilometer full marathon run. It's actually the longest one-day endurance event that can happen worldwide. And I was fortunate to be able to finally complete one of these races in 2013 with a good friend of mine. And doing triathlon, I think, is of that length is probably not overall good for your body, but I found that it's just a great way of focusing myself and keeping in shape. So I continue to, even though there are no races now, and when we were able to travel, I was regularly competing in half Ironman races 2 to 3 times a year. In fact, I had even roped my brothers into it. We used to have two younger brothers, one who lives in Hong Kong, one in Singapore, and we used to go on an annual brothers trip and go and do a triathlon together. So that was fun too.
Wow.
Yeah, these days there's no race to train for, so I just try and exercise every day. So every day I'm doing somewhere between 40 minutes to 60 minutes of running, biking, or swimming, or sometimes some weights training too.
I admire you. I admire you. I barely run a jogging every day. That's the maximum for me. I worry about got a heart attack. Okay. Then I really enjoyed the conversation, and then your life journey is so inspiring to the young people and entrepreneur, I guess. Thank you so much for taking time to introduce your professional journey and then your investment activity at AC Ventures.
Thank you, David. It was a pleasure. And we're for people who want to get in touch, they can certainly feel free to email me, Adrian at acv.vc, and I'm sure David can provide those details in the show notes.
Yes, I'll do that. The show note, I'll leave your contact information.
Thank you.